Welcome, everyone. It's great to be back here with you. And today, it's a slight change in plans. I want to share with you a presentation about Fibonacci's. I don't know how many of you are familiar with them or not, but we use them in our trading every day, and they work very well for us. So I thought I'd share these. I'm still going to share some strategies with you. No worry, we'll go through all of that. But thanks again for being with us. Let's get started. As Travis said, I'm Vince Vora. I'm the head trader here at Trading Wins, and I have been trading for about 30 years. I can't believe it's been that long. And actually, last night we were having a live market chat session with some of our members, and we were talking about the trading environment and how this is such a great environment to learn in. You know, for those of you who haven't been trading for very long, you might not have had the opportunity to experience any different type of market environment, but there's certainly easier environments to trade in, but these are the type of environments where you really learn your lessons and help you become a better trader. But most people think that or get into trading for the action, right? The thrill of the chase. And I'm going to share a bit of a funny story with you. When I was trading professionally, I worked with an individual who had that exact mindset and really used to get hyped up before trading. Actually, what he did every morning, his morning ritual, was he used to have a beer glass, you know, those long beer glasses, and with a long straw, but he would fill it with coffee, and he'd have about 8 of those first thing in the morning, and he would be so hyped up that you really couldn't keep track of his keystrokes on his keyboard. It was just unreal. And then he'd get to a point where at around 11:30 in the morning, he would actually start running up and down the stairwell of the office tower because he just couldn't sit still. It was unreal. But, you know, most people would think, hey, that's the way to do it. And if you saw him sitting at his machine just hitting those keys, you'd think he was accomplishing a lot. But, you know, the complete opposite. There was another trader in the corner that you wouldn't even notice he was there, yet he was quietly making millions. So it's really all about discipline and your approach. And I'm going to show you a very simple way that we do this, where you don't have to get hyped up. You don't need to drink a lot of coffee, but it is very effective. So here are just a few of our recent winners. Now, these are per share amounts. Not dollar amounts, but I'll share some other trades with you as we go through the presentation. But here at Trading Wins, we've been developing our own strategies and systems, and they are actually very powerful, and they're not only used by retail traders, but also many hedge funds out there. Now, in today's presentation, I'm going to share with you our money management rules. I'll go through this quickly for you because I do this at every presentation, so I'm sure there's many of you who have seen these before, but I do repeat them because they are truly the core of any strategy. Then I'm going to share with you 2 of our most powerful trading strategies, and then talk about Fibonacci's. And specifically, I'm going to go over the retracement tool and the extension tool and touch on a few others as well. And then hopefully we'll have enough time for some questions. Now, before I get started, just out of curiosity, how many of you have seen me present at an event such as this before, whether it's a live event or a webinar? You please just take a moment to type yes or no into your chat. Really would appreciate it. I'm going to grab a sip of my coffee and we'll get going. Excellent, thank you. Nice, seeing a few familiar names. Excellent. Well, thanks everyone, and welcome again. Let's get started here. So please do remember that trading can be risky if you're not completely familiar with it. So please do not trade with real money until you're completely comfortable with the system that you are using. Now, here's how we minimize, reduce our exposure and risk to the markets. When it comes to trading, you really should start off with a positive mindset. And this may seem silly, but it's very, very important. And more than anything, trading is about managing the position once you're in it, not just selecting that entry. And so once you're in that trade, you really do need to remain calm and think clearly to be able to manage it appropriately. So you should always trade with an amount that feels completely insignificant to you. If you're worried about the amount of money you have in that trade, you simply won't be able to manage it appropriately. So please always, regardless of how big your account eventually gets, always remember to trade with an amount that feels completely insignificant to you. And one of the ways we do that is we never risk more than 5% of our account balance in any one trade. And if you have a larger account, or when you do have it, consider reducing that to 2 or 2.5%. That way, you'll be reducing your risk considerably, but you'll still have a sizable trade on. We also always keep half of our account in reserve, and the reason being is so many factors when it comes to the markets that are completely out of our control. So you can get any type of big event or news announcement out at any moment that will drive the markets against you, and if that happens, you're going to take a sizable loss. So this is meant to, number one, reduce such a loss should it happen, but number two, if it does, you then still have half your account that you can put back in the markets and make back those losses. And more importantly, in this environment, more than any other, it is extremely important for you to be selective and picky when it comes to your trades, and only select 1 or 2 of the highest probability trade setups on any given evening or any time frame that you're choosing. Be very, very selective. There's a couple of other rules that we follow. Number one, you will never taking profits. The only reason why this applies to us is because we do limit our risk significantly, and I'll show you exactly how. But more than anything, I want you to walk away with this. If there's one thing you're going to walk away with today, it's this. It's never, trading is never about whether you yourself are right or wrong. That's important, but it's all about how much money you make when you're right versus how much money you lose when you're wrong. It's all about execution, and I often get asked about my win rate or accuracy rate, etc. Remember that guy sitting in the corner, the quiet one that I talked about in that story? Well, he had a 38% win rate, but he made millions, and it was all because of the way he limited his risk. So I'll show you now a couple of strategies that we use that are very simple and straightforward, but protect your downside while allowing you to take advantage of the upside. Okay? So let me bring up my charts, and we will get right into the strategy. So this is my Metastock platform, and by the end of the presentation, I'm actually going to show you how you can get a free copy of the Metastock platform for yourself. It's a great piece of software. But when it comes to our strategies, they are all based on trend and momentum. So whenever you bring up a chart, the first thing you should look for, you should be able to quickly spot trend and momentum. Now, if we look at a stock such as this, and this is actually an ETF, EWZ, the Brazilian ETF, you can quickly spot a trend. This is obviously trending lower, but how do you easily and quickly spot momentum? Well, there's a couple of ways you can do it. One of them is to judge the slope of the actual price bars, the actual price action, right? Such as here, clearly pointing higher. And when it comes to momentum, the more significant that slope in your direction, the better. That means the more powerful the trend actually is. Okay? So one of the tools we use is the 20-period simple moving average. You see I'm hovering over it right now. It's the blue line here. And we've traded this and tested this with exponential, with weighted moving averages, you name it, but we've always come back to the 20-period simple because it really does work best. What it does is it pretty much draws that line in for you. So by looking at that 20-period moving average, you can quickly tell whether you have momentum on your side and how significant that momentum is. But more importantly, what happens is when you have a trend such as this, a slope lower, and then you get a retracement such as this, if you're not using that 20-period moving average, you can actually easily mistake this for upward momentum. But when you see that the 20 is still pointing lower, like in this case, then you know that this is merely nothing more than a retracement before a continuation of that trend. So then it just becomes a matter of spotting the exact entry point to take advantage of the next leg lower. And that's what this strategy does. Let me draw it out for you very, very quickly. For a long trade, what you'll be looking for is a slope higher. And remember, the more significant that slope, the better. Then you'll patiently wait for some type of pullback or retracement. It could be a sideways consolidation. It could be some more significant retracement. But once you see that in place, what you're going to be looking for and waiting for is a reversal signal in the form of a bullish engulfing setup. And there is a difference between the setup and the actual trigger that will get you in the trade. Now, for the purposes of the setup, you'll only be looking at the bodies of the candles, not the wicks or the tails, just the bodies. And for it to be a valid engulfing, bullish engulfing setup, what you're looking for is that the body of the candle on the right completely engulfs the body of the candle on the left. They can actually be at the same level, but the one on the left cannot exceed that open and close of the engulfing bar. Okay, so once you see this, this is telling you that that retracement phase is over and that this upward trend is going to continue. Okay, now once you see a valid setup, your trigger into the trade is a trade that is one tick or 1 penny above the absolute high of the engulfing bar, meaning including the wicks, okay, the absolute high. Should you get that, you go along and you put your stop just below the low, the absolute low of that same bar. That way your risk is always contained to the range of that one bar. And again, you can be very selective and only pick trades with very small engulfing bars. Okay, look at this example here. And actually, let me draw out the short example, and then I'll come back to this. Okay, but for a short trade, it's the exact opposite. In other words, you'll be looking for a slope lower. Remember, the more significant, the better. Then you will wait for some type of pullback or consolidation, and it's at this point where you'll be looking for a bearish engulfing setup. Okay, now the bearish engulfing setup is going to look identical to the bullish. In other words, the candle on the right, or the body of it, needs to completely engulf the body of the candle on the left. The difference between the bullish and the bearish is that for the bullish, you want the engulfing bar to close as close to its highs of that period as possible. So it should be a green candle, while the bearish one should close near its lows and should be red. Okay, but again, this is a reversal signal telling you that this consolidation or retracement phase is over and that the trend lower is going to continue. Same rules apply. You wait for a trade just below the low of that bar, the absolute low. If you get it, you go short, and by short, you can short the stock. You can buy a put, you can buy a debit spread, sell a call credit spread. You can use this with many, many different option strategies. And you put your stop just above the absolute high of that same bar. Okay, so if we look at this example in here, we had a nice flush lower, we got a nice orderly retracement, and right in here, and I'll zoom in for you in a moment, you get a nice bullish engulfing setup. Let me just zoom in for you and bring that back into the screen. Hopefully you can all see that. Let me know if you can't. Right there, you see the body of this candle completely engulfs the much smaller body of the candle on the left. We then wait for a trade just below the low of that bar. Okay, once we get it, we go short, stop goes just above the high of that same bar. Okay, now what you'll notice with this setup is that the majority of the trades that trigger tend to move in your favor immediately, and that's huge, especially if you're trading options. I'm sure you all would agree that if you open an option trade here and it goes against you right away, trying to make back that loss in premium is going to require a much greater move in your favor than it otherwise would if it's triggering right away. Now, there's a couple of very important rules that you must be aware of here. Once you have that set up, if this stock or this market traded above the high of this engulfing bar first, okay, before ever trading below the low, the trade would be disqualified. Also, if two additional bars closed regardless of the time frame, because this works on all time frames, if 2 additional bars closed and you still have not seen a trade below the low, you would also disqualify it. Why? Obviously, the momentum isn't as strong as we initially thought, okay? But more importantly, if you follow those 2 rules, most of the trades that wouldn't work out with this system are not even going to be stop losses. They will just simply be disqualified trades, okay? So, now, the other thing to focus on is that look at the amount of risk you have on this trade. In other words, look at the difference from the entry to your stop on this. I mean, from low to high on this bar. Okay, the high was 32.73, the low was 32.15. Okay, so we're talking about less than 60 cents of risk, and look at that potential run here. I mean, no one's expecting you to stay in that trade right till the end. Okay, none of us have a crystal ball, but even getting a portion of that move will more than make up for many, many losing trades. In my experience with this, and I've been trading this for well over a decade in all types of markets, all different types of exchanges around the world, you should have more winners than losers, and your winners will be much greater than your losers, and that is the actual formula to success here. Let's go through a couple of other examples. Let's look at, for example, CMG. Let me zoom out here. There we go. Here were the couple of trades that you saw in that opening slide that we talked about. This was one of them right in here. Okay? So in other words, look at that momentum lower. Look at the slope of that 20-period moving average. It's almost vertical, right? When you see that, it's very significant. Okay? Then you patiently wait for a retracement, and there was one in here. Okay? You got that retracement, and the retracement can be a bar, it can be 2 bars, it can be 7 or 8. It really doesn't matter. Also, the setup can happen in front of the moving average. It can overlap it like it does here, or it can happen beyond it. What matters is that at the time of the setup, you really need to confirm that you still have that slope in your direction. If the pullback goes too far, the moving average will start flattening out and rolling higher, and that means you've lost momentum and you do not want to take that trade. But these are the types of setups that you are going over and over again. And in a moment, I'm going to show you how to confirm these and really put the odds in your favor by using those Fibonacci tools. Okay, so that is one of our strategies. Let me show you another one we have here, which we call our winning momentum strategy. And the one thing I love about this is that there are only 3 indicators on this chart. One of them is the same as the other strategy, which is the 20-period simple moving average. Okay, so by having this layout on the screen here, we can actually spot the setups for both strategies, and when they trigger at the same time, they're very powerful. I'll show you a few examples. Now, here we have the 20-period simple moving average. This shaded area here is a very stripped down version of the Ichimoku Cloud indicator. Okay, it's just the cloud portion. Normally, there's many other lines which are other moving averages, but they're calculated a little differently. But we look at the cloud, or use the cloud portion, just for trend. Okay, we don't look at color. We don't look at anything other than if the candles here and the moving average are below the cloud, we consider that to be a downtrend. If both are above the cloud, we consider that an uptrend. And if one or both are overlapping the cloud, then that's a consolidating market that we do not want to trade in. Okay? Now, lastly, down below in red here is the RSI, or the Relative Strength Index. And this indicator is normally used to identify extreme areas of overbought and oversold conditions. There are normally lines here at the 80 and the 20 level. And when this red line were to get up above that 80 level, that means we're overbought and we should pull back. If it gets below the 20, it means we're oversold and we should bounce from there. Well, we use it slightly differently. Number one, the default on most charting platforms is a setting of 14. We want a much more responsive RSI, so we cut that in half. So the RSI you're seeing on here, it's a period of 7. It's a 7-period RSI, and what we've done is remove the lines from the 80-20 levels and put one right down the middle at the 50 level, okay? And this is actually going to identify our setup candle. So this is how we would use this setup here. Let me bring up a different stock here to show you a clear example. This is Starbucks, okay? Now, when we look at a chart, what do we do when we first bring up a chart? We're looking for trend and momentum. So do we clearly have both the candles and the moving average on one side of the cloud? No, we don't. So we do not have a clear trend in place. So right now, we're in wait and see mode on Starbucks. But if you look back here, we were clearly in an uptrend. And did we have momentum? In other words, look at that slope of the 20. Yes, we did. We had fairly significant momentum. So once you have those two things, you then turn your attention to the RSI. And for a long trade, what you're looking for is for a cross from below that 50 line back above. Okay? Now sometimes you'll get it, you'll see it come back and just touch that line and bounce. That's okay as well. Okay? But what we're looking for is a move from below that 50 line back to above. And that actual cross, if we take our crosshairs and we look at that, we identify the candle when that happens. Okay? Here. Let me uncheck that, make it a little clearer. So this is the setup candle here. And once we've identified our setup candle, what we're looking for, again, is a trade above the absolute high of that bar. Okay, one tick or one penny above that high. Should we get it, this time the stop loss or the stop level goes just below the most recent low. We want a bit more of a buffer here. Why? Sometimes you'll get what we call a double dip here, or a bit of a W pattern on the RSI like we do down in here. Okay, in other words, it'll cross and then it'll pull back again and cross again. Now these are actually, and this is actually good news because these are some of the more powerful setups when that happens. But if it pulls back on you, you want a bit more of a buffer than having your exit level or your stop level just below that same bar. So you want to give yourself a bit more room, okay? And of course, the other rules apply as well. If it trades below the low of this bar first, we disqualify it, okay? But just like the other strategy, once it triggers, it tends to move in our favor. And what you'll notice during a sustained trend is that you will often get multiple setups. So there was this one here. There's actually setup back in this area here. There's a setup here. There's a setup in this area, the double dip in here, okay? Any one of these would have been a winner. But if you were to enter here, let's say, and then you see another setup, how should you handle that? Well, if you're more of an aggressive trader, you can add to your position at every subsequent setup. If you're more conservative, the way I am, I personally maintain my original position and use every additional setup as further confirmation that I'm in the right trade and I should remain in that trade a little longer, okay? Very, very effective. Now, how many of you trade Forex, for example? This works on just about anything. Let me show you an example of a Forex pair. Here's the Euro CAD pair. Again, you're looking for those periods where you have a clear trend with momentum on your side, okay? And then once you see that, so in this example, you have the bars and the moving average above the cloud, we clearly have trend. Do we have momentum? Yes, we do. Look at that slope of that 20. So once you see that, you then patiently wait for a pullback, okay? And once you get that pullback, as long as it comes back to that 50 line or dips below and then back above, that is your setup, okay? That, similar to the engulfing pattern, is telling you that that trend is over, that retracement is over, and that the trend is going to continue, okay? And you can see how many times this happens over and over again, okay? Now, in times such as back here, where the moving average is flat, you do not want to take that trade. You've lost momentum, okay? So when you see that setup, just make sure that you still have that trend in place. And here's what I talked about earlier. What do you see here? that's a bullish engulfing setup, is it not? The body of this candle completely engulfs the much smaller red body there, right? But look, we also have a cross above that 50 level. With momentum, we've got both systems setting up at the exact same time. What happens next? Boom, off it goes. Okay, look at over here, same one. Did we have trend? Yes. Did we have momentum? Yes. Did we get a pullback? Yes. Here is a bullish engulfing setup. Down here is your double dip on the RSI. What happens next? Boom, off it goes. Okay, very, very clean, very simple. Let's look at a few other examples. Anything. Let's look at another ETF, USO, for example. Here's another clean one. Here's another double dip, only this time to the downside. So when it's for short trades, it looks like the letter M. Okay, but the main characteristics of that chart that you're looking for are trend and momentum. Are we below the cloud? Do we have momentum? Yes. So we have trend and momentum. Once we get this pullback here, right here, we patiently wait for some type of reversal signal, whether it's in the form of an engulfing pattern or the RSI. And here's your double dip. Okay, what happens next? Boom. What this is actually doing, there's no real secret here. What this is doing is just selecting the safe areas to take a trade. Okay, that's really all it's doing. You can all remember the collapse in crude from that 100 level down. Well, now it went down to that 20 level. This is USO, the ETF of oil, but that initial run took it down to about 40. And if you look here, just as soon as it got below that cloud, there was an engulfing setup here, okay, with momentum that kind of kicked it all off. Look what was over here. Same thing, that double dip pattern. Now, we carry on. We look at here, and there's another one. Now, you might have said, yeah, this is kind of flat. I'm going to skip that. Not much momentum. Who cares if it worked out? What you're waiting for and what you're really trying to do here is really put the odds in your favor, okay? And only trade, take the safest, the highest probability setups. Well, look what happens over here. We get a 3-bar retracement. Boom, there's a nice bearish engulfing setup at the same time that we're seeing that bounce to the 50 line and a bounce off it back below. What happens next? It collapses, right? We get a continuation of that move. You don't need to catch the full move from start to finish, especially not when you're risking a very, very small amount on each trade. So that's really the key here, is really keeping your losing trades to a minimum, okay, and capturing much bigger winners. How many of you here trade the S&P E-minis? Let's have a look at the S&P E-minis here, okay? Any time frame we can look at. Actually, we have many members who trade the 5-minute. Let's see if there are any setups today on the 5-minute. And let's talk about the Fibonacci's here for a minute. Well, let's look at here, the E-minis. So now let's go through this. There was a setup here. Now this happened at 2 in the morning, right in here. Let's look at back in here. There's a nice double dip right in here on the 5-minute. Boom, right in here, nice and clean. You have momentum. You have that trend in place. You get a nice orderly pullback. All you're waiting for is some type of reason to get in. And whether you're using the RSI or that engulfing pattern, boom, there it is. Look back here, same thing. You get that nice orderly pullback, you come back to that 50, and off it goes, right? Nice and clean. Let's expand this, let's say to a 15-minute. How many of you trade a 15-minute? My favorite intraday time frames are 15-minute and the hourly, okay? On many different instruments. It doesn't have to be the S&P E-minis. But look right in here. Boom. Nice pullback. You still had trend. You lost a bit of that slope, but you still had it. There it was. Here's a much cleaner one. And see, you could be very, very selective. You might look at a setup like this and say, well, we've lost some momentum there. It's not the highest probability setup. But you might be looking at a different market or a different stock that has slope like it did here. Nice and clean, and there. We have both an engulfing pattern and that cross back below that 50 line in here, right down in here. Let me mark it for you. Boom. There it is. Okay? So, now how do you make these setups even more powerful? All right? Let's look at Fibonacci tools, and this is where the Fibonacci comes in. Now, Fibonacci was a famous Italian mathematician, and he came up with these numbers, and what they really do for us in trading is help us identify significant areas of support and resistance. So another way to put the odds in your favor is when you have that trend and momentum in place, that slope, and you get that orderly pullback, you want to look to your left and identify the most recent high and low, okay? And then you take your retracement tool. It's on the left here, little r here, and we're going to go from the most recent high to low here, okay? Now, here, the key levels I want you to focus on are these, the 38.2, the 50, and the 61.8, and really it's a zone for me. If you get a pullback anywhere within that range and you get a reversal signal there, that really puts the odds in your favor. That's a very strong area of support resistance. Now, you see how here it popped up just above that 61.8? Normally you would rule these out, but there is a very specific Fibonacci level that the pros use that I'll touch on in a second. And if we look to the left here, can we see if there was more support or resistance in that area? Yes, right over here. So if you look at that, and that lines up beautifully with that reversal pattern, both an engulfing setup there, and those are the kinds of setups that you want to look for. Okay, same thing to the long side. Let's do this quickly. Let me remove this line and show you. Let's look at this setup here, this pullback. You go from the most recent low to high. Did it pull back within that range? Yes, it came right back to that 38.2 to 50 level. Can you see it right in here? There's that engulfing pattern right in here. Now, that's one tool you can use to confirm your entries. How do you set your targets? Well, when you see that setup, you can use the same high and low to predict your targets. This time you're taking what's known as the Fibonacci extension tool, or on Metastock, it's called the Fibonacci projection. You take that tool, you go back to your same high and low, okay, and you go back to your low here, and boom. Now, for these, what you want to identify, let me throw in one more level that I think is key here. Let me just type that in. It's 127.2. Let's just make sure. Oh, I don't think I added it. Let me just double check here. 127.2. Yeah, I had to click add. There it is. So when you're setting your projections, what you want to look at are the 127.2%, the 161.8, and then that 261.8 level. Okay? Those will be your targets, and if you're trading multiple contracts or multiple lots of shares, you can scale out at those levels. It works beautifully. Look at this setup. Okay, this was the setup. It triggered. Where did it go? First level here, and look how key they are. They really identify those strong areas of support resistance. What does it do when it approaches it? It hangs around for a while, finally breaks through. Where does it go? Next level. Hangs around, pulls back, bounces off that level again a couple times, boom, hits the next target. So they really are fantastic tools, and these are just two that I showed you, the Fibonacci retracement and the extension to our projection, as they call it on Metastock, but there are many others. And I wanted to make you aware of a course that we have on this, on the Fibonacci Crash Course. It's an on-demand recording, and in that class, I reveal the tricks and the specific Fibonacci levels that most pros use, that most retail traders aren't aware of. Now, some pros might get upset that I'm revealing that, but remember that trade I showed you where it went just beyond that 618 level? Well, it captured, this specific Fibonacci level captured that trade perfectly. In this class, I will also show you how to combine the RSI with Fibonacci tools in a slightly different way that works extremely well. Also, I will teach you how to identify very strong areas of support resistance even without using those. And when you combine the two, it's even more powerful. And in addition to the retracement and extensions, I'm going to teach you about the arcs, the fans, which are quickly becoming one of my favorite, the spirals, and the time series. So you'll actually have 6 different tools there, or 5 different tools that are really going to help you pinpoint your entries and identify your profit targets. Now the link for this is tradingwins.com/fibs, F-I-B-S. But let me tell you exactly what you're going to get so you know that it's right for you. Now we've put together a package for you that's worth almost $900. Don't worry about it. We're not going to charge you anywhere near that. But let me go through what's included in this because it's an extensive package. And first of all, I do want to say that you'll have lifetime access to that on-demand recording of that Fib course. Secondly, we've included 30 days of membership to our pro service, and this is really a key part of our service because with this, you're going to be receiving actionable trade alerts. Now, let me share with you a few of the most recent close trades that we have on here. As you can see here, there are a couple of shorts on CMG that we took recently. Again, these are per share amounts. Here's DGX. This was a loss of $1.22. Netflix winner $12.55. AVY down 130. UA short up 19.20. What do you notice here? This is the key: is keeping the losses small and allowing the winners to run. And this is a trade table that our members see in their profile on a daily basis. And here are some notes on some suggestions we have for these setups. But these are the kinds of trades that you'll be seeing as a member. Also, every week we have 2 live market chats where you get to come into our room and ask me any trading related question you like, and they're also recorded. So during that 30 days, you're going to receive 8 of those recordings. And here is a snapshot of this. Give me a quick second here. Let me just bring that in so you can see. What you're going to get is your own video library, where you'll see here there's our nightly market updates along with our market chats. There's pages and pages of recordings. This is actually now up to 66 pages, so there's hundreds of hours of recording here that you'll be able to watch at your leisure, and you'll be able to continue to build your own library. We also do send out nightly videos. This is where we profile our trades every Sunday to Thursday. And in addition to that, remember I said I'll show you how you can get that Metastock platform that I was using today. Well, we're throwing in 2 months, a 2 months trial to the Metastock Pro. And I wish I had time to show you the whole software because it's pretty impressive. But you'll get two full months to the full Metastock Pro software. And as a special bonus today, we're going to throw in a day trading crash course that we have. It's a completely different strategy. It's been very popular. And now only if you're buying this package today, you need to give us a call. Call us at 1-888-574-2426, and we'll throw that in completely free. No strings attached, no nothing. No one's going to try to sell you anything else. We're just going to add that to your account. So now remember, the whole package, this is real value, $900. We're not asking for anything near that because Investor Inspiration keeps having me on here, and they do such a great job. We always want to put on a great offer, so all we're asking for is just $27. I mean, obviously, this isn't a moneymaker for us. We're proud of what we do, and we really want to give you a chance to see what we do and become a member of ours. We think you're going to love it, and we have 30 of these packages available here today. Okay, now if you're calling in and you know, the phones may get overwhelmed, and if you're getting a voicemail, just leave a message and one of our staff will call you back as soon as we can. Okay, now I think we have a few minutes for questions. I'm going to bring on our coaching coordinator, Raul. He'll help me read them off so we can get through as many as we can. Raul?
It's always a pleasure to be on these sessions. I got first comment in from our friend Michael, who's bought some stuff from us in the past and said, "Done, I'm in. My prior purchases have been excellent." Michael's always
Thanks,
here,
Michael.
always joining us for a good time. Question from Justin was, why do the Fibonacci's work?
You know what? I can't tell you exactly why they work. There are those magic numbers out there, but I can tell you that I've traded with them for many, many years, and I can definitely vouch for them. They do an incredible job of identifying those areas of support and resistance. And what I encourage you to do is whenever you draw them like that, once you've set your targets, don't take them off your chart. Leave them on there, because even in the future, even months ahead, you will be able to use those same levels as areas of support and resistance. It does an amazing job of predicting those levels.
Mario says, does your teaching, am I able to use your teaching on eSigma?
Yes, you can use it on any platform you like. The indicators we have on these strategies are very basic. They're included in just about any charting platform. We just thought we'd throw in a 2-month trial of Metastock Pro, which they sell for $500, because it really is a nice piece of software.
Leonora says, when will I receive the courses? Just ordered them?
As soon as your order gets processed, it can be anywhere from a few minutes to about half an hour, but you'll be receiving an email with the links very shortly.
All right, you can probably hear in the background the phone's going off the hook. I got so many questions. Let me see if I can pick out a few more of them. Can I use your strategies on any charting platform you talked about?
Absolutely.
Vince, I exclusively trade options. Can I use your strategies on those?
Yes, absolutely. They're great with options. Options allow you to leverage these type of strategies. And again, what these Fibonacci's are doing, and especially the those key levels that I reveal in there, they're allowing you to pick out the highest probability setups. They're confirming your setups and allowing you to separate the average ones from the really strong ones. That's what this is really helpful with.
For Frank, who's asking when does my pro membership start, it starts tomorrow. Frank, you'll get your own personal login information. You'll be able to set your password. You'll be all set to go. You can start accessing the library right away.
I should say too, and sorry to interrupt, but in the nightly videos, as part of your membership, in our nightly videos, you know, they're really meant as educational tools. So we not only talk about what the markets are doing and where we think they're going, but we highlight trades. And it's not just from these systems, but from all the systems that we use. These are the main ones that we use most often. But there's a lot of other topics, technical analysis tidbits that come up. And these 8 live market chats, I think you're really going to love. They're my favorite part of the membership, where I get to interact directly with you, and you can ask me any trading related question you like. It doesn't have to be on these strategies.
I've got less than a minute to go. Quick question. How long will it take you to make back the $27 you spent? I know you're going to scoff.
Yeah, well, I mean, come on, let's be honest. This is a no-brainer, really. Even trading one option contract, you should be able to make this up in no time. You know, we really preach discipline. During these 30 days, you're going to hear me talk about it over and over again, and I really do try to help you build the habit of limiting your risk and taking advantage of those upsides. So $27 really is completely insignificant.
Vince, our time's up. Can you just repeat the link one more time?
Sure. The link is up here, tradingwins.com/fibs. If it hasn't already been, maybe we can put it in the chat for you. You can just click from there. This is everything you get. Remember, if you're buying this package, call us today to get that day trading crash course absolutely for free. Here's our number. I want to thank you all again for joining us and for having me on. A big thank you to Investor Inspiration and Travis. So with that, I'll send it back to you, Travis. Thanks very much.